What's going on, everybody out here on YouTube? What's going on, everybody on YouTube? It is February 18th. How we all doing? How's everybody doing? Check, 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 check. Ooh, too loud on that mic. What's everybody doing today? How's everybody feeling? Yo, 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 yo. How we all doing? How's everybody feeling today? It is February 18th, Tuesday, the day after President's Day. What a wonderful day in American history. Shout out to all the presidents. They need more love. No, all right. Anyway, enough with the jokes. I know it's been a couple days since I went over the crypto trades. This weekend was kind of a blast in the past for me. A lot was going on. And I was dealing with a lot of business craziness. I did not live stream when Bitcoin crashed. I usually like to live stream when Bitcoin crashes. So don't think I hide away when Bitcoin crashes. There's many videos of me streaming from years ago and other channels when Bitcoin is crashing. It's actually a good time to live stream. It was sad that I wasn't able to jump on. Just had other obligations with my family. But that's what happens, right? Interesting. This is all right. Testing 1 2 3. Testing 1 2 3. One more check. Okay, so the first thing I want to get into is I want to discuss Bitcoin and show you guys what's going on with Bitcoin right now. Obviously, the elephant in the room, right? Now, this is my crazy charts with Bitcoin. So what I had was I had first drew this and I said we should make it up to this line, which we did. Then I drew this bull flag, and I said we should make it up to this line, which we did. We actually surpassed it. We then came down with that horrible bashing. The lowest we went to looked like 466. We didn't even hit 9,400, though, which could have been confluence at this white line, bounce off that line. We did get the V-shaped recovery, and since then, Bitcoin has bounced back all the way from the bottom of that wick, a nice, healthy 7.4%. At one point, it was as high as 72,974. We're now sitting at 10.16. And where do I see Bitcoin going and why? Okay. When I talk about Bitcoin, I do like to look at it on the daily. Okay. And here we go. In the daily, we're still in this bilateral triangle, really, which honestly, with the halving and a lot of bullish sentiment, I see it breaking to the upside. And with a target of 27,200. So that is my target. And what do I see and what's the reasoning for that target? Well, it's the base of this triangle, gives me my length of my target. And I see that the RSI on the daily, it still has some room to grow. Like, it's in a good place. Like, and if you can see this big move here, we kind of came down. Look at these two come down. It's kind of like this. One, we have our double bottom here. And then this is really where, if you can see here, so we went up, down, and that represents, and then here, when we came up, we came down, and we're kind of right here now. See how this is checking back up? I mean, we didn't go as low, but we're like kind of right here. This was in the center, and then we boomed 9,000, almost in the same number range, all the way up to 19,000 in that move there. So it's interesting to see that the RSI is kind of in a similar place. After a big shot down, like we've had our moves, we've had our resets, and it just didn't help. Bitcoin, to me, is in a healthy place to grow. Short term, long term, I say we have a move. I don't think we break below 10,000. We may break below 10,000 again, but I don't think in the near short term. And I hope actually never again. But I don't want to say that because I don't know. Anything could happen. Anything could happen. That's why you have a stop loss, and that's why you always just, you never know exactly what's going to go down. I'm just going to change these headphones. Oh, there we go. These headphones were, maybe it is the mic actually. Just like a deeper, nice sounding. There we go. Okay. So what trades did I just make and why? And what am I looking at and how do I make a trade? I'm just going to get into that, like the little early specifics. You can see I have what are 3 indicators. This is the simplest way to trade, and there are many other indicators to use, and it does get more complicated than this. But as you begin, you will have 5 moving averages: the 21, the 50, the 80, the 100, and the 200. And you will label them as such in color form, and eventually you'll get to know the colors. Like that's yellow is 200, the blue is the 100, 50, the 80, the 50, and the white here is the 21. Now, whenever we're in a bullish market, you can see the 21 is at the bottom, cascading below, like if you were to put these in successive order. Wherever we're in a bull market, the 21 is at the top, the 200 is at the bottom, and in sequential order, the numbers are all running nicely, moving well. So we're looking for crosses on these points. And I'm actually almost going to have to like take out my old work because it's hard to see. These lines are hard to see here. If I can just take them away for a second. So we can see we had a cross, the 21 crossed this, and now the 50 has crossed, okay? These are golden crosses. These have a significant movement, especially on the daily. To see this on the daily is a strong idea that we are heading into a big move coming in for Bitcoin. So mark my words, folks. I say short term was this target here of 12,700. From there, we'll reassess. We may make a big move up and down. Then to break that resistance there, you can see. And then we need to break that 13,800 level, really, which was that limit in June. That was just insane. Maybe you take some profits off the table here, wait for a pullback, and reinvest. So right now, I would still be long in a Bitcoin trade if I was in one, and I would keep it going. I am I'm long in like a long-term Bitcoin holding. Right now, I don't have like a short-term Bitcoin trade. What I do is I do USDT pairs off that idea, and they tend to kind of work out for me sometimes. So if you could see right here, I basically put $5,000 into the market at about 7:30 tonight, 8 o'clock. I put $2,000 into NEO, technically up $23 at 1.2%. I put $2,000 into Storm at $8.9. I'm only up 4%. And I put about $1,500, about $1,600 into Verge. Now, why these 3 coins? Why did I buy these 3 coins? Well, let's jump into them and show you. We'll start with Verge. I bought the Verge Bitcoin pair, okay? And normally I do USDTs, but I bought the Verge Bitcoin pair, and this is why. Rounded bottoms are the most bullish pattern. You can see a rounded bottom here on the RSI. You can see a rounded bottom here on the MACD, and you can see an overall parabola. You can see my rounded bottom. It's on the 4 hour, so let me go to where I drew that. That's why it wasn't fitting. We're on the daily. So I see a double bottom here, okay? Double bottom, you take the length of this middle part, you go to the top of the W, and you get your target. So our target, 96 sats on this W here on a double bottom. Also, this is moving in a parabola, as you can see. So it should be basically following this parabola as it moves up. It could kind of go up here and then come back down here to 57, that's kind of what I'm hoping. But we could see a move down here, and you could reaccumulate at 48. Be a nice place to maybe double my bag. Like I would put another 1,500 in if we do see that move. That's kind of what I'm hoping for. We do see also, if I put a line here, we do see some support. We had resistance up here. Now it's becoming support. Will this become an SR flip? Very interesting place where we had a bounce of a wick. So that's another thing, an idea of confluence. I also lately have been just doing this. I like to buy in the end part of the white, or like right in the white when I see the white histogram starting to have shorter bars. And what I mean by that, let's make this big. This is the MACD, the moving average convergence and divergence. It's basically an algorithm that takes all the moving averages together and kind of shows you where the momentum of the move is going. Now you can see every time the blue line goes below the red, it's technically a negative price action. When the blue line crosses the red, it's a positive price action. And I've noticed this a lot. Now, see the histogram is getting shorter. This is the area I like to make a buy in, because this is a lagging indicator, meaning once it happens, it then shows you that. Because of that lagging indicator, it basically is something you want to be preemptive about. Like you kind of want to judge how it's going, and you get better after watching it over and over and over again. It takes time for you to understand basically how to play the MACD, but I'm just showing you how I play the MACD. And let me prove to you why. Okay, here's a section. Verge isn't the best coin because it doesn't get heavy volume, and it's basically at the bottom of its bag once it starts getting more healthy and moving up. But this is why I would accumulate Verge here. Like, we bottomed here at 36. We bottomed again here at 39.40. We raised up. Looks like we'll have a support and resistance flip. I think this is a great time to get into Verge. Also, I've seen it go to 55 and 56 like 2 or 3 times now, and then get slapped back down with the movement of Bitcoin. So if Bitcoin can just consolidate, even move up a little bit, and not go too far up and not too far down, just stay in between 10,200 and 10,500, something like that. I think Verge in the next 2 or 3 days, you could see this nice move. And we're going for 96 sats, a 40% gain. That would be amazing, right? Imagine taking your portfolio up 40%. And again, I don't put my whole portfolio in here. As you can see, only a $1,500 trade, and I'm willing to double it if we do have a pullback and move on the accumulation. So this is why it has a MACD cross coming. Aggressive buy if you want to come back down to the bottom of this rounded bottom parabola here. And target of 96 sats. I mean, I don't know what else I can say to you guys. It's looking like a healthy move. It's got a lot of room to go on the RSI. It's about to approach that 50 line. It's at like 49, 48, which, you do want it above 50 for a bull run. You have to be above 50 for a bull run, but you also don't want to be buying when you're already above 50. You lose that little percentage. So why not get in now? Speculation. I'm only risking, on the 1500, I'm risking about a 10% stop loss. So I'm only risking, actually it's less than that. It's about 8%. So I'm risking exactly about $100 in that trade. And I'm trying to make upwards of $600. So it's a 1-to-6 reward ratio, and you want to constantly look for trades like that over and over again until they make sense. Then we have Storm and Neo. Okay, now let's go into Neo. And honestly, there's other coins you could go through and do this, and I'm going to show you why I found these coins and how. No trading group told me about them. If they were in another trading group, it was coincidental, or maybe I put it in my head subconsciously a couple days ago, but it just, I have my own list. See all these coins here? I keep a fat list of coins that I'm always watching and checking out. And I'm probably missing out on some other ones as well. If there's a coin that you guys really like that I should be paying attention to, please leave it in the comment section below. Let me know. I'd really appreciate it. Okay, so here we go. So let's get into Neo. Neo. At 1541. I got Neo. Now, Neo is breaking out of a falling wedge, so the time to buy was the breakout of the falling wedge. But I also saw that this cross was about to come when I bought it. About 2 or 3 hours ago, this cross was on its way. So here, boom, and we pitched down, and now we're kind of keep coming up, and we got bought up by this wick. These wicks mean that people like it, like it's coming down, and they're buying it up. Wicks create buying pressure. So when you see a long wick like that, it means there's a lot of buyers trying to get into this right now. We're also ready to go on the RSI, and we're just beginning to make a move here on the MACD. So this could be a potential move. Let's look at it on the daily. On the daily, we are getting a little high, but we're not too overbought yet. Here on the MACD, though, we have a little bit of a curve, and it looks like we can get up a little more. This is also a scalp trade. I'm looking just to get maybe 7% if I can, if I'm lucky, out of Neo. So that's the idea here, to basically buy. Again, I made my buy around this section here on the 4 hour right here as this was curving up about to cross. So I knew we were going to have a bit of a movement, and we'll see what happens with Neo. And then we have Storm. Storm is a coin not a lot of people were talking about, with very low volume. Storm has some volume, but it's dwindling off right now. See, I see this curving, and I saw like basically a curve here, like a bottoming curve on the RSI. That's a bullish curve, in my opinion. I feel like we're going to have a little bit of a move. The charts are showing me that we're on this trend line. We came back to the trend line. We had a huge spike just the other day. This is some insane volume, insane movements. So I know the coin can move. It's very low volume, so it's basically a far riskier trade than the other trades. We do have this move here, but we're in the red of the white. I'm hoping that the next histogram is a little lighter, and we just start to bounce off this trend line. I'm trying to basically get $200, trying to get to 10% on this move right here. So not a lot. We're just trying to get up here to the 17.1. We're trying. See, this isn't even a cent yet, right? This is 0.0015. This would be a cent. So this is a tenth and a half a tenth of a cent. We want to go to a tenth and a 7/10 of a cent. So we're trying to get basically 0.0002 two thousandths of a cent, right? 2 thousandths of a cent. and that will give us 10% gains here in Storm. And that's the name of the game here that we're playing. I want to go to traditional markets for a second, and just to show you some correlation. And we see the Dow now with kind of a double top. Interesting, a double top, double top. There's a double top there. If we take just this short-term double top and we play it out how it should play, how we could see it happening, right? Is you would take this length here of the double top, you would go back to the bottom of the M, and that would position us down another from 2.9 all the way to about 2.87, just another 100 points, and that's a very short-term move. But there's two double tops here, and we could play that one. See what happens with that. That would be this long, and then we would come back here once the M was created. And that is a short-term loss there of a nice, almost 2,000 points for the Dow. That would be just the beginning, in my opinion, of a heavy correction of 6,000. Honestly, is that going to happen? I think we hold support somewhere around here. There's too much QE. There's too much Fed pumping money into the market. So with that being said, you're going to see more people buying into Tesla. What's happening is no one wants to put their money in the bank. Why would you put your money in the bank when all these stocks are just skyrocketing and doing great, So it's putting more normal people that have never traded ever in their lives, they're now getting into the market. I'm seeing it now because I'm seeing people that wouldn't even dare even buy cryptocurrency. People who used to make fun of me, and now they are actually buying it. Now, my trade of the day in the regular markets is JNUG. If you've been watching my channel, I've been consistently, this is this green box. That's why I love my green boxes, because they're there for a reason. I made them before. I was hoping maybe we would bounce off the trend line and come back down, and I'd be able to accumulate this back at 60. But there's a chance that this breaks out of its triangle, and it started to do that. This triangle was very tight. The tighter you get inside of a triangle, the more explosive the move. I said, if you can get this stock, which is a JNUG, which is the ETF 3 times bull, 3 times the shares, basically you would get it between 67 and 72. That was my buy window that I was holding up for JNUG. And today, look at it. It's up 12.2%, up to 82. It did a great job, man. That's a nice gain. And on a caveat to that, it follows gold. Gold is in a bull flag here. I have the potential of this bull flag breaking out. If it can break out of this line, which it looks like it did. It kind of did. And now it just needs to break through resistance here. Honestly, it breaks through resistance right here. And my goodness, gold becomes an uncharted territory and starts to get to a place where we've never seen it. Very interesting. Not in a long time, at least. If we go back to the daily, when's the last time we saw gold above $2,000 an ounce? That was back in 2012, and the highest we ever saw gold in the history of its moves here at 1,900, and that was in 2011, right after the 08 crisis. People just probably decided, hey, bankers maybe weren't sure. So let's go back to present day gold. But yeah, resistance here, temporary resistance here at that 1609, 1610 area. We break 1610. We may flounder in the 16s for a little while, but we're on our way to $1,700 an ounce. If I see $1,700 an ounce gold, I wasn't trading back in 2010 as heavily. I didn't know that much about the markets. So, but that would be a huge deal for me. And that's why I would be trading JNUG. I think it's a really good time to be buying JNUG. Yeah, all these other stocks are cool. There's this and that. You can make money on Tesla, but I think we're just close to a huge market collapse. It's only a matter of time. Even if it takes 18 months, to me, that's pretty short time in trading value. And if you're already up on a market, I just think you shouldn't be too greedy. Also, on the daily here, you see we're about to have a bullish MACD cross. We're low here on the RSI, not even into the overbought area. So this is pumping. I had one friend who asked me if he should dump his Groupon stock. So I just wanted to check Groupon on the NASDAQ for him. Okay, 305. Let's see what's happening with Groupon. Well, it has strong support in this area. So here, it hit this area once. It likes this little spot. Look, 1, 2, 3, 4. That, to me, that's a nice double bottom. We're going to have a nice move out of this. Might be an accumulation time for some Groupon. Here's what I see happening. Short-term target. Short-term target of 389. I mean, off of 305. We see heavy resistance in this area too here. A little bit of resistance here. And definitely hard resistance here. If we break out of that, like, we're going back up here into this area. So, you know what I'm thinking here is we're in a little bit of a flag as well. Right? It's a bit of a bull flag. They come back down, come up. What's the short term? We take the length of the pole of the flag. I'm also seeing the 21-day moving average cross the lower moving averages. Very bullish. Very bullish move. About to cross here too. Short term 362. So you're looking at probably 26% gains coming out of Groupon. Never thought about it, but it is in a downtrend. I mean, lower low, lower low, lower low. But it did make a higher high to this high. Have to watch it. If it comes down here and it breaks through this line, it makes a lower low. That may be time to maybe cut this puppy loose for a little while and see how much it will retrace. But if we look at this last kind of move, let's look at it on the 4-hour chart and see what it's saying. If I pull a Fibonacci retracement on it and see what goes on with that as well. Kind of here, I guess. To me, it's like retraced as low as it can. When it hit these areas, look, it was so oversold. Would have been a great time to buy more here at this 213 level. Yeah. So it tumbles 25% on earnings. Missed the CEO calls for profound change 4 hours ago. Now, I don't know if I see that now. Let's see. See, I see a spike. Maybe did that happen after the market? Is that happening in let's see what they're saying. And sorry to do this, guys. I'm just doing it for a subscriber. He wanted to know a little bit about it. Groupon plunges 25 in late trading Tuesday after the e-commerce company posted disappointing. We did not deliver the financial performance we expected during the fourth quarter and recognize we must move swiftly to put Groupon back on growth trajectory. Rich Williams. So, wow. So we go to Groupon after market, right? Just want to see what it's priced at. Groupon. I mean, it lost 25%, so 10% is $2, and it is, I mean, 28 cents, 10%. So, I mean, it's basically 28 times 2, 20%. You're looking at 56, 85 minus 50. You're looking at like a 225 price range, right? See, then it boomed up to 305, and then it lost 25%. So it lost damn near $1. So it's at like 225 now, is what I'm going to guess. Yeah. So it went lower. But it didn't go as low as that bottom. See, it's probably somewhere right around here. It's back to that same bottom, which is a triple bottom almostly. Have to see how low it goes tomorrow. Yeah, if it didn't have gone that low, it would have been a place to maybe accumulate it. But yeah, if it does go that low, I don't know, maybe time. I do not like reverse splits. Those aren't good ideas at all for anybody. Okay, let's get off that. I don't really give a damn about Groupon. I would never buy that stock. Would never tell anyone to buy it. There's so many other awesome moving stocks. There's so many things with more liquidity. There's so many things with just more volatility, funner, more interesting. I like Groupon a little bit, but I'm not a huge fan. Yeah. Seeing gold at 1,600 an ounce and breaking through this bull flag is really making me quite ecstatic, though. And tomorrow night I will be doing a coronavirus another episode because I feel like it's been a few days. I've let the news kind of do their thing. They're not giving me enough news. So with that, I feel like I have to do my part and give you guys some good news. Okay. Here's Messari. If you don't go to messari.io, it's an amazing screener. It's got a lot of awesome stuff. We got Bitcoin up 3%, Ethereum. We can see the biggest winners, the biggest losers, the liquidity supply, the real volume. That they think the volume's a little better here. Super Bitcoin up 264%. Quanta utility token. These are Dragon coins up 48%. OmniTube. So you're starting to see the U network, UUU. Now, this is something Tim Draper has spoken about, this U network. And I saw it go from 0.01 all the way. I'll show you this year to date. This thing moved in the beginning of the market. Here it is right here. So it was all the way at 0.1, and I saw it go all the way to 9. So it 9x'd here in the summertime. Basically from June all the way to August, did a 9x. Came back down to nothing, 0.1 again, kind of its bottom. And now it's starting to like kind of make a turn again. In the last month, it's got a little bit of movement here. This is something no one really talks about, so I just want to put that guy on your radar. That Tim Draper has mentioned this, and I think he actually trades it or plays it. Or he has something to do with it, so you can look into that. But it's very interesting, the U network. But yeah, a lot of coins up, 9% here for Icon, which is nice. See that? I'm a big bag holder of Icon. I'm a big supporter of Icon. Again, not a lot of channels talk about Icon. I think it needs to be talked about. It's moving the cities of Korea. It basically already has it's already making money. It shows that it has a balance sheet where it makes money. It's not just a speculative asset that says it's going to do something. So yeah. But this is a great place. Instead of CoinMarketCap, you can come here. Get a screener, assets. It's clean. And they have a bunch of other stuff too. Follow them on Twitter. Check them out. So gold, technical analysis, price futures. Big price surge after overtaking resistance cluster. Gold futures surged to nearly its highest level of the year on Tuesday, driven by a drop-off in demand for high-risk assets and low U.S. Treasury yields. Both moves made gold a more attractive asset. According to the headlines, the catalyst behind the rally was Apple's surprising warning of lower revenue due to the impact of coronavirus. The real reason for the rally were expectations the major central banks will be forced to cut interest rates further or inject additional stimulus into their respective economies. Early Tuesday, the RBA minutes showed policymakers discuss cutting rates at their last meeting on February 4th. On Monday, New Zealand's Prime Minister announced the country's GDP would come in lower. Also on Monday, China, Singapore, and Thailand announced new stimulus measures. Yeah, anytime a government said, don't worry, we got this, we're going to pump a bunch of money into it, gold's going to go up. You're going to freak out a lot of people. If everything was going well, you wouldn't have to punch anything. So you wouldn't have to say, hey, don't worry. So China basically said, everyone, don't worry, we have enough money to pump up these markets. I mean, you don't want to be using the government's money to pump up the markets. It's not healthy. It's not a good idea. It's scary. It's scary as all heck. Bitcoin now in firm bull territory. Here's why a move to the fresh 2020 highs is imminent. Bitcoin saw some intense bull flavoring volatility this morning when the cryptocurrency rallied from 9,600 to over 10,000, with the latest upward movement making an ardent defense of the support that exists around 9,500. This latest break above 10,000 may lead the cryptocurrency to see significant further upwards momentum, as it has marked a notable increase in the strength of the BTC's current technical situation. It is important to note, however, that the benchmark crypto may first see a pullback that leads it to low as 9,900, with the continued defense of this level making it a prime spot to enter fresh positions. Yeah, and you're probably going to see a lot of people with 9,800 buys, 9,700 buys. I'm sure there's a few people with those 9,200 like Dreamer, those 8,900 Dreamer buys as well. They say, hey, I'll buy if it goes to 10.2, but I'll put it at 8.9 to see if I can snatch it. But I'm on board, Another well-respected cryptocurrency analysis trader shared his thoughts on the cryptocurrency technical strength in a recent tweet, in which he notes that Bitcoin could easily rally up towards 10.6 before finding any significant resistance. Strong 4-hour close above key resistance I have on my chart. My next area of interest is the untapped highs at 10.6, confluent with the highest time frames. We'll see reaction there before potentially taking some off the long. Going well so far, he stated, while referencing the levels seen on the below chart. Strong 4-hour close above key resistance. So yeah, the coming several days and weeks should offer insight into the long-term implications of Bitcoin ongoing 2020 rally, as the fact that all recent dips have been quickly reversed seems to suggest this is a long-term uptrend. Yeah, like we didn't go back down to 89 like we were. Like back then, even a few months back, a loss like that would have propelled us way further down. SIA. I've held SIA coin for a long time. I don't know. I hold like a few 100,000 SIA coins. I believe in them. 2 kids out of MIT, man. You know, me being from Massachusetts, maybe my love for the state, and just, I even like the project, and I've looked into the guys who created it, and I think Sia Coin's an awesome project. It launches Skynet blockchain, peer-to-peer file storage. Sia has launched Skynet, a content delivery network and web hosting platform. The platform provides a blockchain-based peer-to-peer file storage system. Skynet is powered by Sia's blockchain-based peer-to-peer file storage network. Users and developers can upload files and applications to Skynet. These files will stay online as long as at least one peer is willing to pin the file. This means that data is more or less permanent and immutable, announced the project on February 18th. Sia's Skynet service should be distinguished from its main file hosting service, which costs money and which is intended as private cloud storage for individual users. By contrast, Skynet is intended for public web hosting. Support for encrypted private data is under development, but is not currently a feature on the platform. So you won't have privacy as much, you know. Bitcoin set to join on the DeFi hype with TBTC launch. TBTC, developed by Suma One and Keep project, is live on Ethereum's Ropsten testnet. The protocol aims to bring a price and network-pegged version of Bitcoin onto Ethereum and could bolster DeFi adoption. Wrapped Bitcoin, or WBTC, is a popular solution which pins Bitcoin price peg on an ERC20 token. The only problem is that minting the wrapped version requires a user to undergo KYC and mint it from a network partner. Adding to these woes, WBTC is held in custodial manner by partner exchanges. Even if users were to acquire WBTC on Uniswap or Kyber in a non-custodial fashion, there are still inherent custodial risks. A trustless recreation of Bitcoin on Ethereum has been a pipe dream for some time, despite several attempts. Synthetics issued a SBTC cannot be used in DeFi applications for insurance. It is meant to be a synthetic asset that gives investors exposure on Bitcoin's price movements. Pretty interesting. But what does that mean for DeFi? Well, the DEXs in the Ethereum ecosystem have one unique flaw. They only enable trading for Ethereum-based assets. The solution is interoperability through the trustless recreation of assets, as seen by the advent of TBTC. Set Protocol, as an investment automation protocol, uses WBTC for its users to recreate Bitcoin exposure. By integrating TBTC upon launch, they can reduce custodial and price risks for their users. Compound can open a TBTC money market. DDX and DYDX can offer margin trading for TBTC. And that could establish loans for TBTC, taking advantage of the arbitrary opportunities. Now, a lot of people don't know what the halving is, when the halving is. I have someone here saying halving, so let's go over the halving. Let's talk about what that means for Bitcoin, and let's show you basically what's going on. Now, if you don't know what halving means, it means that Bitcoin halves every 4 years. The last Bitcoin will be mined on 2140, the year 2140. At that time, it will take millions and millions of computing power to mine one Bitcoin, and it will cost millions and millions of dollars of electricity. We don't know where electricity will go and how we'll be able to harness the energy of the earth from then, but I do believe the price of electricity will not be as high. The Bitcoin halving is an event that occurs every 4 years when 210,000 mined Bitcoin blocks and reduces the amount of Bitcoin mined per block from 12.5 to 6.25. So basically, it's 12.5 Bitcoin to 6.25 Bitcoin. This reward halving was hard-coded by Satoshi Nakamoto in the Bitcoin protocol. And remember, this halving is 12.5. It just went from 24 to 12.5 in 2016. I've been waiting for this halving for years, man. Like, once I got into Bitcoin heavily, it was like right after 16. We must have just had a halving. Went through a bear market. It was tough times, guys. And now the halving is upon us. What an amazing time. Many argue that Bitcoin's reward halving is one of the killer applications of Bitcoin. The reasoning for this statement is simple. The periodic halving has enabled Bitcoin to become the first form of money in history, which total supply is known at all times, and where inflation is controlled by nothing more than an algorithm. Let me explain that again, if you guys didn't understand that, and why a lot of people think I'm shilling Herbalife or something or some pyramid scheme when I tell them about Bitcoin. Literally, it makes me laugh, but it's true. The reasoning for the statement is simple. The periodic halving has enabled Bitcoin to become the first form of money in history, which total supply is known at all times, and where inflation is controlled by nothing more than an algorithm. Not the Federal Reserve, not freaking Powell and his raising the rates. In this article, we'll be covering 7 facts that you need to know about the 2020 Bitcoin halving. Let's dive right in. This is the third Bitcoin halving. The halving is expected to happen in May or June. How come we can't place it? Because it's when we reach a certain amount of blocks. And depending on how many people use Bitcoin and how many transactions it goes through, we won't be able to be sure exactly when those blocks finally get mined. But we know kind of the range, okay? 85% of all Bitcoins will have already been mined at the time of the halving. That means only 17% left. There's only 3 million left. Only 900 Bitcoins per day will be created after the 2020 halving. Only 900 every day. It's kind of crazy. Think of how many people want to buy Bitcoin. Only 900 will be out there a day. Honestly, like if you're not buying Bitcoin today, if you're not freaking out as much as, like I freak out as much about dying from the coronavirus as I do not getting enough Bitcoin. Because look, it's like, oh my God, like there'll be a day where like it will just be too expensive to grab one. And like you'll be only to get what you had. And you'll look back like, I had 30 grand in my savings and I didn't even buy not one Bitcoin. Now it's worth 80 grand and I can't even come close to half a Bitcoin. Bitcoin's inflation rate will be 1.8% after the halving, lower than gold. I mean, it's going to change the game. It's going to put it in a higher asset class. It's going to make it safer. It's going to make the network hash rate. It's going to do so much for Bitcoin. Historically, each halving marked the beginning of the next Bitcoin bull run. After the halving, only 3.1 million Bitcoins will be left unmined. Do you have enough? If that didn't scare you into buying Bitcoin, if you're not FOMOing in, you know, which Bitcoin halving is this? The Bitcoin halving in May will be the third reward halving that the currency undergoes. Since Bitcoin halving happens every 4 years, the first one happened in November 2012. We're in new territory too. It's only the third time something like this ever happened. And every time Bitcoin has boomed up. Remember, in 2016, Bitcoin was $369. 4 years ago, okay? 10x would be 3,000. 30x would be 9,000. We did go to 13. We went to 20 at one point. So you're looking at like a 80x almost for that at that time. If we 80x in Bitcoin now, that'd be $800,000. So and that could happen in 4 years. We could see a $1 million Bitcoin by 2024. It's not that crazy. Like it's kind of mathematically intact. How many Bitcoins will be generated per day after the reward reduction? At a block reward of 12.5 per block in a block time of 10 minutes, miners are currently generating 1,800 Bitcoins a day. After the 2020 Bitcoin halving, this number will reduce to 900. And I've heard that Grayscale, okay, if you want to check out Grayscale out of the UK, they buy half of all the Bitcoin supply in a day, apparently. So they're buying 900 a day. What happens when Bitcoin goes to 900, and they have to buy that much a day? Are they going to try to buy the whole supply? I mean, it'll probably be hard for them to get the whole supply, but this is going to create a shortage while demand is high. I mean, that's the greatest thing you can have in any economy. How many Bitcoins will be there at the time of the halving? At the time of the 2020 block reward reduction, 18,375 Bitcoins will have been mined in total. That's approximately 85% of the total Bitcoin supply. Now, many estimate that over 25% of all Bitcoin have already been lost. This would mean that at the time of the halving, there would in fact only be around 13,000 Bitcoin available. That's not even 0.002 Bitcoin for every human on Earth. So honestly, like, are you understanding the idea of the halving? Especially C Dollars here, this man who was asking about the halving. What will the Bitcoin price be at the halving? Both the halving that Bitcoin has had so far had served as a powerful price catalyst. They have been the best times ever for investing in cryptocurrency. So these lines are the halving, right? The first halving. And right before the halving, we started to kind of move up, okay? And then we boomed up, and then we had a bear market, like a nice rounded bottom, and then you know what? We're leaving the bear market. We retrace, we come up, retrace, and boom, a halving. And then, woof, like you can see, like right after the halving, boom, here we are. We came into the bear market, we dipped, we down, we had a little spike up, and we're about to hit that next halving. What do you think is going to happen, guys, to this wonderful asset? Right after the first halving, Bitcoin price rose from $12 to $140. Like, boom. I mean, that's a 10x, over a 10x, 12x. It's basically like an 11.5x. Weeks after the second halving, Bitcoin started a rally that propelled its price from $582 to $20,000. Okay? Okay, guys? 40x real fast? Who wants 40x? Yay. So, the Bitcoin price has two main catalysts for a rally when a reward reduction occurs. Buy the rumor, sell the news. Speculators like to buy an asset prior to an important event. This is not only true in crypto markets, but also in traditional equities. This effect is what caused Bitcoin's price to rally 1 year prior to the halving in 12 and 2016. Yeah, like you think, hey, I got to buy the rumor, sell the news. As a trader, I have to do that all the time. Like, you don't want to hold the asset as the news comes out. You want to buy the asset and then sell it on everyone who buys it with the news. Basically, the veteran traders selling to the newbies. After the halving occurs and speculators sell, the heavily reduced inflation will start kicking in. Instead of 1,800 new Bitcoins available per day, there will only be approximately 900. This means that if there is more market demand than 900 Bitcoins on a given day, the price will go up. Yeah, that's going to happen. The past two rallies were exclusively fueled by retail money. However, all signs indicate that large institutions like Fidelity, Nasdaq, JP Morgan are getting their Bitcoin investment infrastructure ready in the time for the Bitcoin halving. It's not too outlandish to think that they are aware of the impact a block reward reduction may have, and they will be offering Bitcoin as an investment option to their millions of clients. What do I need to do before the halving? If you're a regular holder, then there's nothing you need to do leading up to the block. Unlike a hard fork, for example, you don't need to move your coins or any specific Bitcoin wallet. You can keep your coins in your wallet like you regularly do. Simply sit back and relax and watch how impressive it is to have a form of money that controls its own monetary policy, and maybe keep an eye on the Bitcoin market. On the other hand, if you're a Bitcoin miner, you have closely monitor your profitability since your block reward will be reduced by 50%. In the past two halvings, this profitability reduction was balanced out by a significant Bitcoin price rally before the rally. Only time will tell if this will be similar. Yep. You do not know, right? 3 thoughts on Bitcoin halving. Facts that you need to know. Yeah, I think we're going up. I don't think there's going to be a buy the rumor, sell the news type of thing going on with this halving. I think we're going to see a substantial move. Now, I just want to show you why I started buying Bitcoin, and that's you have to understand how the Federal Reserve works. And this is super important, so check this out.
So let's do a recap and break it down even more. The way the system works is that step 1, the government creates glorified IOUs. These bonds increase our national debt and put the public on the hook to pay it back. Step 2, IOUs are swapped to create currency. The Treasury sells the bonds to the banks. The banks then turn around and sell our national debt at a profit to the Federal Reserve, which they probably own. The Federal Reserve then opens its checkbook that doesn't those IOUs with IOUs that it writes, checks, on a checking account that has a zero balance. Then they give those checks to the banks and currency just springs into existence, and then the whole process repeats. This results in a buildup of bonds at the Federal Reserve and currency at the Treasury, which is really just a supply of numbers. The Treasury then deposits the numbers in the various branches of the government, and we get to step 3. The government spends the numbers on promises, public works, social programs, and war. Then the government employees, contractors, and soldiers deposit their pay into the banks, and we get to step 4, where the banks multiply the numbers by magically inventing more IOUs through fractional reserve lending, where they steal a portion of everyone's deposit and lend it out. That currency gets redeposited, and then a portion is stolen again, and the process repeats over and over, magnifying the currency supply exponentially. Then we work for some of those numbers, which brings us to step 5, where our numbers are taxed. We pay tax to the IRS, who then turns our numbers over to the Treasury, so the Treasury can pay the principal plus the interest on bonds that were purchased by the Federal Reserve with a check from nothing. Then we get to step 6, the debt ceiling delusion. The system is designed to require ever-increasing levels of debt and will eventually collapse under its own weight because politicians always kick the can down the road. They don't want it to collapse on their watch. And finally, step 7, the secret owners take their cut. The world's largest banks own the Federal Reserve. Those banks make a profit selling our national debt to the Fed. They make a profit when the Fed pays them interest on the reserves held at the Fed, and the Fed pays them a 6% dividend on their ownership of the Fed. This system is fundamentally evil. It funnels wealth from the working population to the government and the banking sector. It is the cause of the artificial booms and busts of modern economies, and it causes great disparity of wealth between the rich and the working class. And it is only possible because we no longer use real money, we use currency. But worst of all, it is a form of enslavement. Bond is the root word of bondage. Whenever a government issues a bond, it is a promise to make us pay tax in the future. Nobody asked you if you wanted to pay tax today for the prosperity we all enjoyed in the last century. Nobody is asking our children if they want to work hard in the future to pay for the prosperity we're enjoying now. George Washington once wrote to James Madison, "No generation has the right to contract debts greater than can be paid off during the course of its own existence." By stealing prosperity from tomorrow so we can spend it today, we enslave ourselves and future generations. Now, this all sounds pretty bad, but there is great hope, for you are the greatest threat to this false monetary system. This system relies on the public being ignorant of its workings. Please share this knowledge with everyone you know, because an informed public that fully understands the system can build a better future for generations to come. And now I leave you with this quote, widely attributed to a former director of the Bank of England. The modern banking system manufactures money out of nothing. The process is perhaps the most astounding piece of sleight of hand that was ever invented. Banking was conceived in inequity and born in sin. Bankers own the earth. Take it away from them, but leave them the power to create money and control credit, and with the flick of a pen, they will create enough money to buy it back again. But if you want to continue as the slaves of bankers and pay the cost of your own slavery, let them continue to create money and to control credit. This is the Federal Reserve in Washington, D.C. It's located on Constitution Street, and that is just as much of a joke as the New York Fed being located on Liberty Street. Both of them are unconstitutional, both of them limit our liberty, and they transfer wealth away from us every second of every day to the Federal Reserve, to the government, and to the banking sector. You are now among the 1 in a million who can detect the theft of your prosperity. So the big question is, what can you do about it? 1. Watch this video until you can describe and teach it to others. Those who understand this system can make preparations for its unavoidable collapse and protect themselves. History shows that those who don't will probably be wiped out. 2. Share this video with everyone, especially those you care about. All it takes is a mouse click or two to get this message in front of millions. Post.
This is why I basically start with this video on a lot of my live streams, and I try to just get people. I don't want people to think I'm shilling Bitcoin on them. I am showing you that there's a few different main assets out here in the world, and some of them do not have a fixed amount. They're going to get printed and printed till they have worth zero. Like, here's the debt ceiling explained.
Current monetary system without collapsing the whole economy. This is why any talk of a debt ceiling is not only ridiculous, it's delusional. The system is designed to require ever-increasing levels of debt just to continue. And that's why politicians will always kick the can down the road and raise this so-called all-the-long bond. Then no new currency is created to replace the currency that we used to make those payments. Whether you're making a payment on a loan or paying tax to make a payment on a bond, the portion of the payment that goes to pay off the principal extinguishes that portion of the debt. But the debt also extinguishes the currency. Currency and debt are like matter and antimatter. When they meet, they annihilate each other. If we just pay off the principal only on all the loans and bonds that exist, the entire currency supply just vanishes. So if we don't go deeper into debt every year, look what happens. The whole thing goes into a deflationary collapse under the weight of those payments. Politicians and pundits alike.
Like, for instance, the first dollar that came out, Federal Reserve basically gave it with interest. So we owed interest on the first dollar. How do you pay interest on a dollar when you only have $1? You need to borrow another dollar. That gives you more interest into more debt. It's a cycle that you'll never end. It's basically a very, very smart person designed this, hoping that most people wouldn't figure it out. And it's been taking a long time for people to figure it out. One last thing I want to show you is what happens when you deposit your money in the bank.
Anything they please. This includes gambling. But when you deposit your currency with the bank, you're not actually depositing it into an account to be safely held in trust for you.
No.
Instead, you're actually loaning the bank your currency, and within certain legal limits, they can do with it pretty much anything they please. This includes gambling in the stock market and loaning it out, at a profit, of course. Now this is where the machine of currency creation really gets cranking, because this is where something called fractional reserve lending comes into play.
You have to understand they already circumvented your wealth by selling bonds to the Federal Reserve at a zero interest at a zero balance sheet. They basically bought the bonds, but they never had the money. Like, no one worked for the money. They didn't create the money. They actually printed the money off a printing press, or they just wrote digits that they sent to the bank. It's just digits in a banking system. So they did that already. Now, when you put your money in the bank, it gets even worse.
Fractional reserve lending is exactly what it says. The banks are allowed to reserve only a fraction of your deposit and loan the rest out. Although reserve ratios may vary, I'm going to use a 10% reserve ratio as our example. If you deposit $100 in your account, the bank can legally take $90 of it and loan it out without telling you. The bank must hold $10 of your deposit in reserve just in case you want some of it. These reserves are called vault cash. But why does your bank account still say you have $100 if the bank has stolen $90 of it? Because the bank left IOUs it created, called bank credit, in its place.
Crazy.
Now, I know this sounds crazy, but here it is in black and white from the Fed. Commercial banks create checkbook money when they grant a loan simply by adding new deposit dollars in accounts on their books in exchange for a borrower's IOU. These are nothing but numbers that the banks type into their computers. And even though these bank credit IOU numbers are very different from base currency numbers, because they only exist in computers, they are still currency. So now there is $190 in existence. Now, the reason people take out loans from the banks is to buy something. They're going to buy a house or a car or something like that. So the borrower takes the $90 that the bank loaned to him from your account, and he pays the seller of the item. But then the seller deposits that currency into his account, and his bank loans out 90% of that and leaves bank credit numbers in its place. So now there's $271 in existence. This process repeats and repeats until under a 10% reserve ratio, an initial deposit of just $100 can create up to $1,000 of bank credit, all backed by $100 of vault cash, just 10%. But as I said, reserve ratios vary wildly. On some deposits, it's 10%, on others, it's 3%, and on some forms of deposits, reserve requirements are 0. The result is that the expansion of the currency supply by the banks is far greater than even this example would lead you to believe. So once again, when currency is deposited in the banks get to lend it out, and then it gets redeposited and relent, redeposited and relent, redeposited and relent over and over again, creating bank credit all the way. This is where the vast majority of our currency supply comes from. In fact, 92 to 96% of all currency in existence is created not by the government, but here in the banking system. Now, massive amounts of currency spewing into society may at first sound like a fun idea. That is, until you remember one of the most important hidden secrets of money from episode 1, that the prices of everyday goods and services act as a sponge on an expanding currency supply. The more currency we have, the more prices rise. This is where inflation comes from.
I hope you guys are following me here. It's not easy to understand this. People would say, why would they do that to me? I don't live in a Ponzi scheme. There's cognitive dissonance here, meaning you'll find the truth and still not want to believe it. It took me 5 years to learn it. And even when I learned it, it took me 5 years to brainwash myself out of a system that I lived in. It was almost like taking the pill and going into the matrix, right? Take the red pill or the blue pill. Pretty sure you take the blue pill and you never come back. You know, I took the blue pill. I think I'm saying that right. I hope I'm tired tonight, so if I'm messing up the colors, but I think I got it right. And once you take the crypto pill, your life will never be the same. Never, 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 never. I like to go to Twitter now. You can follow me on Twitter at CryptoLifer33. And awesome, I just got like 100 new followers in the last couple days, which I think is really, really great. I am live now. Gotta start using Twitter more. Telling people that I'm live. And I will be going over coronavirus tomorrow night. I'm going to be doing a deep dive tonight. I'll have a lot of information for you guys, and I'll be really going hard. So check it out. Okay. Just want to put that out. So why I go here to Twitter is because I want to check out the Fed repo. Okay. Fed's repo program is putting money directly into U.S. equity markets. That's what I'm saying. Like, I can clearly see the movement of the Dow in conjunction with the pumping of the money. It's also making gold go up, because you know what people are doing? They're going to be like, you know what? Print that money. I'll stash it into gold, because you know what? Why not? I'll convert it into an asset that you guys can't touch. Now, something I've been showing a lot of people recently is if I go to the daily, or actually the weekly on the Dow, I show this is the .com bubble here, right? And we're here in 2000, and we crashed all the way in 1999, right? Was the beginning of the .com bubble. And the stock market, the Dow, went from 11,700 all the way down to 7,300. And now look, here's 1999, and we go basically 10 years later to 2010. And look how much the market went up. We're from its high of 11,600 and another high here of 14. So 3,000 of the 11,000, basically about what, 25% the market went up, closely, something like that. We're not perfect on the numbers, but roughly around 22%, I think, is the exact move. We could just see it right here, actually, right? 20.84%. I wasn't too far off there. So you can see I took the top here with this line up to the top here of this line. And what I want to prove to you is that back then they weren't printing as much money as they are now. And now you go from 2010, like we wait till it turns 10 here, December of 09, February of 10, January of 10. We go 10 years to January of 2020. And look how much the stock market has gone up from a high of 14,000 all the way to damn near doubling itself. So that means this would have gone from 11 to 22, which would be like something like this right here. Here is the 08 crisis, the housing crisis. This is like the biggest deal we ever had. And the market went from about 14,000 and it crashed all the way to 6,000. So the market crashed by 50%. And honestly, that's not even that unhealthy. Like I keep saying, like we, as a trader, as someone who trades all the time, and I'm learning from other traders, we learn how to pull a Fibonacci retracement tool, which this is. And we start here and we show you guys basically where it should kind of retrace. And we could retrace back to, 14,000 in this area. And the 618 and the 0.5 is the fib. That's the golden pocket. That's sitting at 15,000. So if the Dow did crash to 15,000, on a technical analysis standpoint, if this was just an instrument you were trading, it wouldn't even be that strange. But it is the Dow. It would have huge implications. And now we're here. Look, we're here. So .com bubble, 08 crisis. We are all the way up here. If you don't believe that the printing of money from the Federal Reserve has propped this market up, then you can easily see the circulation of money, how much money has been brought into society since 2010. They have printed more money in the last 5 years than they did in the last 20 years combined. See, it's scary when you start doing the math. It's very similar to like the polar ice caps, like how much they're melting more every day than they were 2 years ago. Like it's like an exponential movement. It's on par with just getting worse and worse and worse. So I was showing people at the beginning of the program that I like to trade Nugget and JNUG. These are gold ETFs. And they're moving great right now. And my call on them was gold. No pun intended, but I had a golden call on these. I mean, I've been trading them for 5 years on and off. I should be able to tell you guys how to trade this. It's like I've been watching this instrument every day of my life. Now it's in a giant triangle here. Should kind of retrace a little bit, move up, but it could just break out here and just start breaking out. If it gets closer, the move will be even more explosive. But I was saying in this green box to accumulate, and we boomed up today from 70. We were in the 71 region all the way to 82.20. We're up 12% on this JNUG call that I basically harp on it every single day I do this channel. I show this and I say, hey, I think it would be time to accumulate. I think it would be time to accumulate. And when we look at gold at 1,600, and I have my target here at 1699, 1700, basically out of this bull flag, and we are starting to break out. If this keeps occurring and we break through this 1615 resistance, 1700 isn't that far away for gold. we are getting overbought here on the 4 hour. So we'll retrace a little bit. It looks like tomorrow we'll be back into that 1590, 15 region because we're really high. This is the RSI, relative strength index, and this basically shows us the power of a move. And when we're oversold and overbought, basically overbought is up here, oversold is down here in these regions. Above my dotted lines, it's 70 here and at 30 there. And we are getting into this overbought region. You can see the last time we went that high, we had to have a retrace, and we did. We went from 1600 all the way back down to 1537. I don't see the retrace as hard, but I think we definitely could come back to this line right here is where I see resistance and support is right here. See where this hump just couldn't get over at 1577. We a great place for us to establish like a new bottom above this 1550 accumulation that we've been in for a long time. But yeah, I would advise you buying a couple ounces of gold. It won't hurt your pockets. In a couple years, you'll be happy, man. Buy yourself a nice chain. I mean, you'll pay premium on the chain. And yeah, get some platinum, get some white gold, whatever you like. Makes you happy. Gold will keep you happy, make you feel good, and it'll be an investment that you wear on your neck. You won't be mad that you bought some gold. So Fed slashes 14-day repo loans to $25 billion. Will cut further in March. Wall Street parade. Fed performs 14-day repo operation, $30 billion, 29 oversubscribed. This is the fourth oversubscribed term repo and the largest of 4. It's not good, man. This is the last leg of the rally. Really just Fed repo fueled leveraged, highs. Like, I mean, you can see this is the equity market and what they're printing, right? So source, the global investment strategy, Bloomberg BAC. Global equity market's just erupting. Like, wow. And honestly, there is a blow-off, melt-up before we have a huge fall down. If you want to play this, play it. But honestly, like, I'm playing gold, mining ETFs. I'm basically contrarian playing the market. Like, I might as well be shorting the Dow, and it's basically what I'm doing. When I buy gold, I mean, I'm basically shorting the Dow, technically, without shorting the Dow, honestly. So, I mean, that's what I'm doing. If you want more insight into this, like, I am not an expert in explaining it all perfectly. I'm still learning how to do that. A lot of Wuhan stuff. We're going to get into that. And while Hex is moving up too, if you want to get into Hex and crypto world, it's interesting. I didn't do it and I didn't claim, but maybe I should have. Something's making me think about it. Although letting these people leave the Diamond Princess, that's not a good idea. I know it's sad, but I mean, oof, we're in a crazy time right here with this virus and a lot of stuff going on. But I'll be doing exclusive news on that soon. See, I get these Chinese sites where they show you people are just throwing food away. There's not a lot of food around. It's sad business what's happening. Okay, but what I want to do here is show you George Gammon. This guy explains the markets so well, and I don't think there's anyone better who's more knowledgeable of what's going on in the Fed repo market. See, Federal Reserve repo market, Fed funds. QE explains simple and fast. This is like the best way he explains the
Federal
the
Reserve repo market, Fed funds rate. I'm going to explain all this to you quickly in 5 simple steps. And as a bonus, I'm even going to throw in quantitative easing and the discount rate. Step number 1, we've got to understand how money works. It starts here with the government spending. They need to spend. And to spend, they have to issue a treasury bond. Primary dealer, which is a designated bank from the Federal Reserve, they buy these bonds and then they sell them to the Fed. The Fed prints money, and that's how they buy the...
We just showed you that whole thing with Mike Maloney. He's basically going over the exact same scenario, just he's doing it on a whiteboard.
Bond. That printed money goes to the government. The government spends like we know they do. And this money goes to everyone that the government pays. They deposit that in the banks. The banks lend that out to all these normal people just like you and I, and that's how money's created. Step number 2, let's figure out the Fed funds rate. Let me be clear, this is the old school Fed funds rate. They don't do it this way anymore, but it's really important that you understand this. This is how they controlled the Fed funds rate prior to the great financial crisis. We've got the Federal Reserve right here, and let's say the current Fed funds rate is 5%. That means that the overnight lending between all these banks, the interbank lending, they're lending to each other at 5%. Well, the Fed says, well, we want to increase debt in the system, and we want to increase demand and consumption. So we know that these banks are going to loan more money, or there's going to be more demand for debt if we lower this rate to 4%. So what the Fed does is they print money, they buy T-bills normally under 1 year in duration. And the people who sell those T-bills take that money that the Fed printed, they deposit it into the banks. That means the banks have a larger supply of money, and if there's a larger supply of money, then that means that the price of money goes down. That's what drove the interest rate from 5% down to 4%.
See, the supply of money.
Step number 3, the new way.
The supply of money is what controls the interest rate. It's not the other way around.
That they manipulate the Fed funds rate. This is the new school post-financial crisis. And now we've introduced QE, quantitative easing. So what quantitative easing is, the Fed prints money, they go into the market, and instead of buying short-term debt, they buy long-term debt because they want to bring that interest rate down to promote more borrowing from the standpoint of maybe mortgages or something that's more tied to the long end of the yield curve. So it's just supply and demand. They'll print this money, they'll buy these bonds, and that will bring the interest rate from 10% down to 8%. The problem with that is they inject so much new money into the system, so much money is printed, that would bring down the Fed funds rate way below where they wanted it. It would bring it down to 0, potentially even negative. So if they want the Fed funds rate at 4%, they've got to do something about that. So the scheme that they came up with is they said, well, we'll just go ahead and pay the banks interest on reserves or interest on excess reserve. So if you hear the term IOR or IOER, that's what it's referring to. So the Fed says if we just pay the banks 4% to hold their reserves with us, that'll keep the Fed funds rate from going any lower than 4%. Because the banks aren't going to lend out at 3% or 2% or 1% when they could just have that money sit at the Fed and collect 4%. So basically what they do is they create a floor to the actual Fed funds rate. But there's one more problem. You've got all these financial institutions that are outside of the Fed's umbrella. So you've got the normal banks in here. They're kind of the cool kids that are in the system. But you've got all these guys out here that are outside of that system, and they could come in and say, hey, if these banks won't lend you for anything under 4%, we will, because we can't keep our money with the Fed. We're not part of the cool kids, so we can't get the interest on reserves. So we'll come in here and we'll lend to you at 3.5% or 2% or under that rate. That's the big problem with the Fed. So what they came up with, in addition to IOR, is reverse repurchases or reverse repos. And now we're getting to the modern day here. And you guys, I'm sure, recognize that term. So the Fed says to these banks that are outside of the system, we'll buy your
I know if I talk to 100 of my friends and ask them what a reverse repo is, I don't think one of them would be able to tell me.
reserves for that 4%, this reverse repurchase, and then you can...
And I don't think my friends are idiots. Like, I think they're pretty smart individuals. It's just this takes a lot of time and focus to understand.
buy them back from us whenever you'd like. The Fed effectively controls the entire market then to make sure that the Fed funds rate never goes under their target, even though they're pumping massive amounts of liquidity into the system by buying long-term bonds, which otherwise would have brought the Fed funds rate down way lower than they wanted it to go. Step number 4, the discount rate. So the Fed funds target rate right now, let's say, is 4%. And we have all the cool kids down here. They're lending to each other overnight in the interbank lending. But let's say there's an extra bank, Bank D, and he's part of the cool kids, but his balance sheet is getting really, really bad. He's done some terrible things, and he's about to go bust, or he's got some really, really problems. He might not stay in business. So the cool kids, or the other cool kids, they don't want to lend to him because they're afraid they're not going to get their money back. But the Fed, as we know, is the lender of last resort. So what they have is the discount rate. And this is a rate above the Fed funds. Let's say this is 5% right now, and this fluctuates with the Fed funds rate. But what that does is that allows the bank that's in trouble to go to the Fed. They kind of do the walk of shame here, and they go over to the Fed and they say, oh, Fed, we need all this liquidity and we're really running low and we got all these problems and none of the other banks will lend to us. We need this money from you. And the bank says, okay, but we're going to charge you a higher rate, 5% instead of the 4%. That is the discount rate. Step number 5, the repo market. This is a market where pretty much everybody can play. The cool kids can play in there. All these other financial institutions, they can play in here as well. And it's really just the banks lending to each other. One bank will get short on cash, they'll need it, they'll have some collateral like treasuries or mortgage-backed securities. And this bank, let's say they've got some extra money, they will go into the market and they will buy that collateral.
Now, I just want to make a point here, because we all think that the big guys control us and that they're the ones with the power. But hear what he said. When that bank gets insolvent, it uses maybe a batch of mortgage-backed securities to get the other bank to lend to it. If it didn't have millions and millions of hardworking people who had put a down payment on a house to create that mortgage, this bank would be insolvent and they wouldn't be able to lend that money. So they live off the backs of the hardworking people yet again.
Collateral from the bank that needs the money, that bank will give them the collateral, and this is called a repurchase agreement, and it's done with a specific term, 1 to 14 days, and I've heard that they go as long as 1 to 2 months. So you may be saying, well, George, this sounds just like the Fed funds market where the banks are just doing this interbank lending. And it's true, but here technically they're not lending to one another, they're actually buying and selling with a specific term on that contract. Also, it's a market that financial institutions outside of these member banks can participate in. For more information on the repo market, check out this content right here, and I will.
This guy's awesome. You know, he'll sit there every day he almost does a video, or every other day. 3 hours ago, right? Pro money manager at Rebel Capital. And, you know, he's going to talk about just, I don't know, the global financial crisis, shocking new info.
2008 global financial crisis. Everything you know is wrong, and I'm going to reveal the truth.
And I'm not going to spend like hours playing his videos. I do want you to know about him, and I want you to research him, and I think he's someone you should check out. Also, Lynette Zhang. It's funny, I only watch Lynette Zhang. I never watched him on his channel. I found her on my own. You know, it's what happens. These algorithms find out what you're into, and you start getting fed things. Now, Peter Schiff basically said in 08, hit me on Telegram. Oh, I will. I'll let you know, man. It's easy. I use XSplitCam. I'll show you here. I'll bring it out. I bought this I pay like $4 a month for XSplitCam, and then you can just kind of change the background to anything you want. It does YouTube videos. So look, I want to go to this like little cabin in the woods with the fireplace, or I want a green screen in the background, or I want a nice house. I picked this place. I thought this place was like where I would live, man. I'm like, yo, I would live here with the fireplace on and the waves in the background. I actually should choose like a night one. Like at night, I should just be in the studio, kind of just doing my thing, right, in the studio. But it's cool, and you can even do your own thing. Like this is someplace I was at. These are pictures I took with my drone. This is a golf course. Shout out to Mo. Here's another one. Golf course shots. And yeah, you could do whatever you want. You can be in a high rise. You have New York City in the background. So yeah, man. That's how I did it. Don Juan. Boom, boom, boom. That's all you got to do, man. XSplit. And then I use it with OBS. Had to teach myself a whole way to stream. Got myself the mic and just went in, man. Just went in. This is interesting. He's got this smart lady.
Because I'm really fascinated to get your opinion on this.
I'm fascinated to see these two juggernauts in the same room together. Like for me, this is like, for someone else, this is maybe like going to a Justin Bieber concert. But for me, like these are my stars. These are people that I follow. Like I hope to be as learned and as intelligent and respected as them when I'm their age.
In the media or in the YouTube space with these financial advisors, that I just hear constant, especially with the younger ones too, that haven't really lived through a crash or any type of inflation or a 1987 type deal. You just hear it repeated over and over and over again. Well, if you just always buy, so always buy. If the market goes down, well, you continue to buy all the way down, and eventually it will recover. Everyone knows that the stock market always goes up over time. So I don't care if it goes down. I don't care if we have a crash. I've got my Robinhood account, and I'm just going to continue to buy and buy. As long as you're buying solid companies, I'm in it for the long term, for the 20 years, for the 30 years. Correct me if I'm wrong, what they fail to understand, in my opinion, is that stock markets, just because it's a stock market, doesn't necessarily mean that it goes up over the long term. If you look at Japan and look at their stock market in 1990 to where we are today, it's nowhere near the level, maybe 50% of the level that it was in 1990. The European market is, it might just have recently got to a point where it was in 2000, but just because it's a stock market, or just because it's the United States stock market, doesn't necessarily mean that it's going to be any higher in 20 or 30 years than it is today. If you go back and say, well, it's happened every time over the past 100 years, but that's like looking at a roulette wheel and saying, okay, well, we've hit black the last 8 out of 10 times, so we're most likely going to hit black again another 8 times. It just because it happened in the past with the stock market doesn't necessarily mean that it's going to happen in the future. And I'd just like to get your professional take on that.
Well, there are a few things that I would say about that. Number one, when people refer to
Love
the
this lady.
stock market, as you said, what they have to understand is that when a stock goes low enough, it's out of that index and something else gets put in. So
Right.
if all you're looking at is the industrial average over a certain period of time or what have you, you've got to understand there's a rotation of stocks in there. Then you also have to look
Nice point.
at what stocks are driving the company. So for example, right now it's at the highest level either ever, even before 1929 or before 2000, where you just have the market dominated by just a few players.
Right.
So not all stocks are rising. Now, if you buy the index, okay, then those changes might matter. But here's the other point that I really, really, really like to make. And that is that you have to do an awful lot of due diligence, and you really have to dig to understand whether or not this company is truly as solvent and solid as they appear to be. You mentioned Japan, you mentioned the early 90s, and they were really the ones that came out with zombie companies.
Right.
And these are well-known companies. They would be household names, and you would assume that they're awesome. Except that a zombie company is a corporation where at least 3 years and looking into the future, they do not have enough earnings to pay their interest or principal or all the principal on their debt. And so the bank loans them the money.
You cannot make money in the stock market unless you do this. And that is understand the stock market. And it's a lot easier said than done. So I'm going to explain that to you today.
That's why I just trade things I know. Like I trade Bitcoin, cryptocurrencies, and gold. I don't jump into big pharma. I was a holder of Tesla for a while. I tripled my money. I got out. Like, I didn't think I had to keep going. So I don't know. It's like, it's up to you. And yeah, there was gains I left on the table, but those gains are in Bitcoin now, and I think Bitcoin will surpass any gains Tesla ever makes. But you know what? I could be eating my words, and I'll still be happy with whatever I do, honestly. But I think we did great today, guys, as a whole. I hope my community's happy. I think we went over everything. Let's just double check where we're at with Bitcoin. Gold's still moving right now, 1601, holding that nice place above 1600. Really like seeing it up there. Oh yeah, I just want to do one last thing. How do I find what I want to trade? I make it a little big, and I like to be on the white part here of this histogram. It's just kind of like, that is one of my requirements for a buy. I also like to be out of a falling wedge, something like this. Hold on, let me get rid of that. That's my Telegram channel, right? Doesn't seem like it's open though. That's weird. Close that up. And it could be Discord as well. Close Discord. And what I do is I basically start at the top of my list. If I haven't been training in a couple days, or I'm kind of like, I was doing something different, I need to reset my brain. And I just go down the list like this. And I know that here's a buy in this area here. Now these buys I wouldn't have done, but these buys, boom. And I may be getting out of the trade already. Right when we get into the green, I'm out. So I just keep looking. Like this one's ready to go. This one was looking good to me. This is AMB. I just like it right now. It's coming out of the white. It's about to have a bullish MACD cross. It's low here on the RSI. It kind of came off a trend line and bounced back. Look like it's holding support here at this line. I think this is a sexy little buy right now. So, and I just keep scrolling. This is about to get into the white. Not really where I want it yet, but it's on its way. Checking it. And there's other things. I need other confluence with that. I usually like to have a pattern in play, something like that. Here's Atom. I've been playing Atom a lot. It's now back into the oversold territory and popping up. This would have been a great place to accumulate Atom. I'm going to show you the green box again. We'll kind of put a line here. I'm telling you, I hear sirens every 5 minutes. I think it's kind of the coronavirus. I'm going to say it. I hear them. Last night they were around my house like you would not believe. Actually, I'm going to show the footage right now just because I don't know what the hell I was looking at, and I need some help, guys. You didn't want to see what I'm going through right now. I'm going to save that for yet another post, but I had to post what happened yesterday because to me it was just a bit strange. My neighborhood, something I'd never seen. Give me a moment here. I think I'm about to get... Yep, here we go. Okay. It's all the media in this one channel about the virus. It's pretty nuts. We have people packing their food, all sorts of stuff. But if you're still hanging on, I just want to... I'm looking out my window last night, and this is for real. Okay? I hear sirens. This is me shooting out my window last night. Okay?
They all have masks on. All these dudes have masks on. I can show you, like.
You can see a blue mask on his face. A blue mask here on his face.
Down the street.
And this went all the way down the block, like 200 yards. It's as if they had this whole entire area blocked off. Like,
Down the street.
I don't know. If they weren't trying to create panic, I don't know what they were doing because,
Down the street.
like, I thought it was a serious gas leak and we were starting to get it. I thought they were going to start evacuating my whole neighborhood. Like, this guy's with his dogs, like, what? Like, he doesn't know what to think. He's like, what is this, right? And then look, he doesn't go there. Look, he walks away. You seen that? That's interesting. He ends up not wanting to go near there. I mean, I think they were backing the truck up, so it's not that crazy. But now I see them taking a stretcher out, and it's like these guys are not, they're not in hazmat suits, but like they got masks on. You're going to see this too. It's pretty weird. I wish the footage was better. I had to zoom in from like my window, but he's got a mask. When someone just has a heart attack, like I've never seen anything like this. Honestly, in my neighborhood, I've never seen anything like it. And look, he's got a mask on. It's hard to see, but you're... Hold on. I'm going to show you right here. Here's a clear picture of them right here. Blue mask on his face, mask on his face. You know, they have shields that they can take down. They're in their whole suits.
Got a mask on his face.
Got gloves on, and they're pushing a stretcher. I don't know. I don't know what was going on. I never actually got closure as to what really was going on. But that was a little strange for me to see. It was really weird. Yeah, that was very strange. In my opinion, it was very strange. Oh, I ruined my little template. Gotta build my little template again. Gotta put myself in the right spot. Back in the TV you go. Okay. But I hope I educated you guys. I hope I used everything I could. I told you about the halving. We went over some news about Bitcoin, DeFi, pegging it to an Ethereum. We talked about basically what could happen with Bitcoin's future surge. You know, we showed you Missouri.io, which is great. We went over my trades of the night. Let's see if I'm still beat down. They kind of reversed on me. This one went down $10. This one's at 16. This one's a bit break even. This was down 32. So we're kind of back where we were again, which is great. Let's see Verge take a nice move. I think Verge is gonna be a nice winner. I think it's gonna have a nice play. Again, why did I play Verge? I showed this already, but it's because it's in this rounded bottoms are bullish. It double bottomed here, so I feel like that's it. Like, you won't see Verge at 39 again. That's kind of gonna, even with that huge dip, it only went to 45. Like, not enough people to sell it. It's in that white range of the histogram with a curving up. It's about to come out. MACD bullish cross. I just think it's a good time to buy Verge. I think it's going to make a nice move. I think it's going to be tomorrow morning. We're going to see what happens. Let's check on Bitcoin before we jump out. Oh, Bitcoin taking a little move down. It was at 177. Looks like it found some resistance here. We'll see what happens. It looks like it will hold right here. It really bounced hard off the 50. This did cross, but it's curving back up. We're having some bullish moves here on the MACD, the 4 hour, and let's just look at it on the weekly. On the weekly, it's ready to explode. Like, the last time the weekly looked like that was the 2017 bull run. Look, boom. Then we had our bear market, our little move in the summer, came back down, and we're kind of ready to rock again. RSI is in a similar place right here, approaching that white line. We have this looking very similar with our first hump with the MACD cross. You're basically supposed to be buying Bitcoin right now when this crosses on the weekly. If you had done that here and here, you would have made some money, and had you sold when we crossed right there, you might have been lucky enough to get, like, I don't know, 16, 17,000, which is not the general top, but you would have gotten out way before 3,000, tell you that, and so on and so forth. So right now, Bitcoin's looking into a beautiful place in the long term. I think we will hit my target up there, 13,860, and yeah, coming for Bitcoin. But thank you guys so much for watching. Please comment, like, and subscribe. Hit the bell for notifications. Is there any last thing I could do for anyone? Let me know if there's something you want to talk about. Just throw it out there.